if there's dailies, weeklies, and intradays, then you'll see that as well. Like if you go over and you choose, say, an FX pair, then I'll be able to actually look at and see the intradays, dailies, and weeklies that all expire at 3 o'clock. So it puts all of them together in order by, lowest or highest to lowest on the strike. So major edge, major advantage there. And you can see if there's, any kind of skew or anything you can take advantage of, but also just making sure you find the best strike. Because if you're only looking at one contract and not the other, you may be paying too much. And, some examples, let's see here. You may not have known that there was one that was 10 ticks closer for just another $3 right there. You may not have noticed that over here on the dailies, this one's $96. But look at this. I can get one 22 ticks higher for the exact same price. So if I was going to sell, $37.82 would definitely be my choice. They both expire at 3 o'clock. They both have a price at $96. So there literally is, no reason why I would want to go in and choose the one on the dailies, except for I don't know. And even the $37.80 is 96. So that one right there, that's a couple ticks, but even if we get rid of that, when we go up here, we go, okay, we got intraday daily, versus 83 right here, and you go, 96. Oh, but I could get 2 ticks higher. And 2 ticks, 1/10 of a tick can make all the difference. So that would literally, there's no reason to do that trade. That would be the lowest trade you'd want to do regarding the price, the expiration, the amount at risk. Just one of the many, like I said, benefits there of trading on it. And so looking on over again back on at gold and then seeing where it's at, seeing what the possibilities here. Our high side, 1324.2, sort of the top of our range. And so if we go in and pull that up right over here, we got 1323 and 1326. Obviously 1326, pointless. 1323, we're pushing it because we're right in the middle of the range. So at this moment, I don't see a trade. I got to have, everything's got to line up. And I really want to time it to be able to take advantage of the best possible strike at the best time. So don't force a trade. We all have heard that, but it's so true, is do not try to force a trade and just randomly pick a strike. So it needs to line up you need to have a reason for that strike. You need to have a reason for that expiration. You need to have a realistic expectation of movement and where the market's at. Otherwise, you're just, throwing money out the window. And so, the strike's priced well, $56. That means $56 profit, $44 profit potential, and the market's actually above that strike at the moment. So looking at, the live market's at 1323.4. So, not bad. We just got to, it's just a few ticks up there. So, it's, like I said, it's a good pricing model. And, it's not incorrectly priced, I guess would be the best way to put it. But it's still not the right strike because the timing and which one you're going to do and where you're going to put it all together at, you have to make sure you have that right strike. You have to make sure you have that right expiration. We talked a little bit about that this morning on the Bull Bear Binary Hour, and I covered that briefly. And going into just, not, like I said, not forcing the trade and making sure, if I have an expectation of where the market's going to move to, which personally what I do is I like to go in, and let me widen these out, make them a little easier to see. I like to go in and look at the 10-minute bars and then check out the volume on them, and that helps me with my strike selection determination. And if I'm going to do that, then I can go, okay, well, what is my expected move in the next 15 minutes? I don't really see an in the money that I like. Do I see an out of the money I like? And, the closest out of the money right now that I'd like would be, like, say, the 11.23. To go any lower than that, you'd only be risking, $4, but do you actually expect a move on the market, which is possible, but do you expect it to move 4 points in the next 15 minutes? No. It would be the correct answer. If it does, then it would be breaking out of the expected range. That'd be moved down to 1320. We'd be right here at the bottom of the range, but I'd also, remember, we have low to high on that expected range. And so when I talk about expected range, let me show you what I mean specifically. Okay, so looking right over here, this is the 1 hour. I'll bring this up versus the hour and 20 minute. So on the current hour, right here, we have the expected range. We're basically at 2 out of 3 points on the expected movement during this hour. Now, granted, we are also at about 1,700 on an expectation of 2,700 contracts. Now, if we break that, we'd expect to hit those 3 points. If we don't break that volume, we don't expect to. And most of the time, obviously, there's no all the times, but most of the time when we break the volume, like there's an example where we broke the volume, but we didn't break the expected range. But most of the time when we break it, then we also break the expected movement. So we got about a point of movement left in the current hour, but we don't have an hour, okay? So go over here, and I'm going to change this and move this on down to 30 minutes because we got 13 minutes left just to see like so where are we at in the current half hour. The current half hour, we basically have maxed out our expected move. We have one more tick of possible movement to the up or downside. And we're right on track on volume. We are about 60 contracts away from meeting the expected volume right now. So there we go. So about 35 contracts. So we're getting there. And so if I go over and look at this, then I go, okay, well, that's what I got right there. And you're looking at that movement going, all right, so I'm at the expected move. If I could have got a strike, like when it came back up and it hit this high up here for that 30 minutes, and let's say we would have been able to get a strike like at 11:25, that would have been perfect. But since that strike didn't exist, then, we really don't have, the ideal move on that contract, making that a very difficult trade to pull off. The only thing you can do right now is you could look at the 1123s as long as you're going to go with the current market movement. This is a tight trade, okay? So it's not your ideal setup. Yesterday we had a little more ideal setup. And like I said, you don't want to, overforce the trade. But looking at, we do have price moving down. And yeah, I am on 1 minute charts right now because we're going into, 12 minutes till expiration. So really tightening up on the trend. But we got every thing saying, short right now. So at the moment, I would be actually okay with that. Before I wasn't until we broke here below this line. And just in the last 2 minutes, we broke below the 1123. But I'd have a very, very tight stop. And be watching the trade if I was going to go with it, because you're right on the line. You can't really get any closer, and it's a trade that I would not hold into expiration. I would want it closed out before it comes up to expire, because that dark zone. Now, unless I get like just a big movement, ideally I prefer to never hold till expiration. But so if you shorted that trade, let's say you got in at $50, which is about $50 there, $45. Then set a take profit on that trade just while we're in this break. I'd put it right around $15 right now for a take profit if you're in that trade, okay, for a buyback. All right, we'll be back right after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a license to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhoads, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. All right, so going over this trade, we actually talked about this trade this morning, okay? And now, it wasn't this exact same trade, but just the gold trade in general. And the trade we talked about was we were looking at the magnet price on the gold contract. And so to show you that a little more specifically, you know, where we're at on that. And the price that we were looking at target was around 13.22, okay? And so the market being basically attracted to that level based on where the last high volume bar was located. And so to show you where we got that information from, backing up. A little bit more over here. And then we were, you know, going through, and right there we have this massive volume bar right around 11 o'clock on the 26th, okay? So setting a, you know, very high volume magnet price, and the market, you know, kept coming down to it, but not quite hitting it over and over again. And as Tommy mentioned, you know, like right there, we got it again. We kept testing that level. So, right here, so I can go in. I'll draw it on both charts, make it a little easier to see. But 13.22, sort of being that that big magnet price, and then now I can bring the volume out of the way. I can even bring this chart up and show you what I'm talking about. So, as we're scrolling over, as we're looking at this trade, and you know, we watch this. This is the price level. This big pink line right here. Okay. We're watching, okay, and then this morning we get into it, and looking for a short setup, we go short, and that's the price we're targeting. It's dropping down. Let's see. Let's get to the morning. So multiple days we're working towards hitting that level, waiting on that short. We get it, and right up here, almost there. Trying to get to where we were on the show. All right, so right there on the show it's a 10 to 11 o'clock show, bull bear binary hour. And so looking at, it going down, hitting that 1322. It almost gets to it, doesn't quite. Pulls on back a little bit, and then bam, nails it. Okay, right there. Right just past 1245, 1255. Hits it again at 130. So that's where we're at right now. We're actually right at the 1322 level. So if you were in that trade, on that gold trade, and you had your $15 take profit, you should have taken your profit already. So the live price is at $15. Okay? And actually, it dropped down to 9 there a second ago. And basically using that magnet price, using that expected range, looking at the current trend, I know I'm combining a lot together, but the magnet price is huge. The more you can use that magnet price, the better off you're going to be, because it's going to allow you to go in and really effectively, pick strike selection, and put different pieces together. And so, we were looking at getting in right here. So where we got in the trade rise, it started breaking down. Okay, I guess that should be a short arrow, right? And so I'll put that arrow on there, because that's just when it started breaking down for us. And we were in that range, so I was sort of nervous about the 1323 at first. We came in, and I'm like, it's sort of ticking up. It may, pop up another point. But then it came right back up and hit the 0.5. Notice it hit the 0.5 deviation level perfectly. Okay? And then started heading back down. That's when we hop in the trade for about $50, right about 1323. Okay? With an expectation that it's going to go down to 1322. That's only a 1-point move. Okay? It's nothing. But the reason that level is so important, again, that's the magnet price. And we're like pushing down towards it again for the third time today. We're hitting 1322. So that's where I'm expecting it to go if it does that pullback. And so after we exhausted the range on the way up, and then it came back down and then pushed back up, and it could not hold that 0.5 deviation level, couldn't break through it, started pulling back down, then I'm targeting this price. We actually got down even a little bit lower. Got down to about 1321.5. And so that's, you're making decisions fast if you're doing these in 15 minutes. So there's, but I'm looking at expected ranges, which I know before it comes up. I'm looking at my expected movement, which I know before it comes up. So if it is going to go, where is it going to go? That's so important to have that expectation, that correct expectation of price movement. And just to show you, the contracts here. Let me pull this up. And I know that was a little bit faster than we did yesterday. But we sort of had to move quick or else it was going to be gone. And not all trades have to be this fast, okay? But anyway, so sold 5 at 46. And we'll do a wrap-up and a P&L and an analysis of it when we get done right there. But basically a max profit of about 250 potential. We took profit a little bit early just in case. And we'll be right back after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
And Andy Heck's powerful weekly newsletter, the Technimental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technimental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technimental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. And so going through a few things, we did a gold trade here. And I want to do a sort of a correct summary analysis on the trade. It went so fast, it was sort of hard to keep up, I'm sure, if you were trying to follow along on that one. And so I'm going to bring it back up. And first thing I want to notice is this morning on the Bull Bear Binary Hour, we said basically the magnet price was 13.22. That's where we expected gold to run down to. It came down, it hit it, nailed it, and then it came back down, hit it again. And then it did another pullback here in this last 30 minutes, which is why I was looking for potential, going back down and hitting it again. And at the top of the hour, when that happened, right here, I was waiting on a little pullback. What kind of pullback am I waiting on? Well, I'm basically waiting on a 1 deviation pullback. And I would have liked to have had a 13.25 strike. That would have been, perfect. That didn't exist. So if I was going to choose a strike, I didn't want to force the trade. I want to make sure everything was right. The only strike really possible for me was a 13.23 or 13.20, but I didn't expect it to move down to 13.20. And the movement we got, the low, really before, right on the close, was 13.21.2. So I'm glad I didn't choose it. I didn't expect it to get there. So with that in mind, I'm looking, but I'm right now I don't really like it. I'm seeing just really flat markets right at this point, even though we have this down move. We got our expected up move. Close to our expected up move, but it's starting to move on back down, and I'm talking about expected high to low But then what happened when the game changed was when all of a sudden I started seeing the trend happening. Okay, so all of a sudden, volatile lines, moving averages, everything, whatever, starting to move down. So I have a few custom indicators I use on this, but it's moving on down right here, and that's when I hop in the trade. Now, I have a tight stop. What's my tight stop? It's going to be right above the deviation line, because that's what I expect to hold if it does go up. I figure it'll go up there. I'll give it 1 point above that, which is a couple points. So, but if I'm, going in, I'm selling at 45 or 50. We're talking probably getting out at somewhere between 65 and 80 if it hits 13.28. So I still have a good risk reward. I'm looking at about a $40, profit potential, $40, risk. Actually a little more profit potential max on the trade. But if I got it at like 65, 70, I'd lose 30, $35. So it goes on up. It hits that. I'm nervous. I'm watching it. I'm like, I may have to bail on this thing. Have a $15 take profit order in there. Then it turns around like perfectly right off that 0.5 deviation. It flies down, and we take profit right there. Let's see. What time did this thing come in? 13:26. So, yeah, right here, literally, this last little spike down, 13.26. It pulled back up, and then it ran down again, right down to the 0.7 deviation. That's where it settled out at. And so you can see, again, these live tickets here, replacing live trades, real money. And if we do the math on them, your max profit potential on the trade, if you would have went in and you would have sold the contracts, let's see here. Trying to get it up on the screen. There we go. It's hiding behind it. All right. So if you sell for 46 times 5, your sell price is your max profit potential. Most you could have made on the trade was $230. Okay. Now they're worth $100 a piece, so basically 100 times 5 would be 500. So you minus that from 500. The most you could lose is $270. Again, that's if you held all the way to expiration, which I talked about we don't want to do. And so therefore, that's the challenge right there. But I mean, it's 1-to-1. That's not bad. Okay, even if you held the thing, that's not horrible. I don't like to hold if I don't have to. Yesterday I held because we had to, and you know what? We got full profit on the trade. So anyway, so looking at this, I went and I sold at 46. I was like, you know what? Let's go ahead and set a take profit at 15. So minus 15. So if you sold at 46, you bought back at 15, you made $31. We did it on 5 contracts. It's $155. If you did it on 10, that's $310. Nothing massive, but we're talking about getting in a trade and being out of the trade within 8 minutes. And on our risk reward ratio, even with taking, because we were planning on exiting early too if it broke up. Being a 1-to-1 either way, whether you hold it or whether we took profit or got out early. And 8 minutes, $150 ain't too bad. That's not too bad of a P&L on a trade there. So just want to point that out. Something I noticed too, I was looking and I saw someone, I don't know who it was, but somebody who didn't know what they were doing or just trying to get lucky, I guess. And I'll see these pop up. And let me see if I can find one, because I don't want you to make this mistake. I also talked to a trader the other day that made this mistake. And they'll go in and like they're trying to buy back at, let's see here. I'm going to find an example of this. At, say, like $5, or $7 or $6 or whatever. And let me show you this on the binary scanner. And, let me click the on top button. There we go. Okay. When I'm looking to take profit on a trade, so let's say I go in and I sold, earlier up here, like on the pound, okay? And I'm looking to take profit on a trade. And let me put both sides on here. There we go. What should be my expectation on my take profit? Like, where should I set my take profit? Because this can really get you hosed if you don't know really what you're doing. And like I talked to a trader, and he's like, I had my take profit at, say $3. Okay? And there were no weeklies. So let me get rid of the weeklies, because this was yesterday. So we're looking at the dailies here. And I got weeklies. Let me go back. There we go. Get rid of those and get rid of those. Okay. So, he's like, I have my, take profit set at $3. And I go, well, why? Why would you expect that to get filled? And the lesson I'm trying to teach you here, if you learn this, is really important, is if you go over and you look at right here, the binary price ladder, if I sold at $50, I should not expect to be able to buy back for less than 4 before expiration. It doesn't matter if it drops 60 pips, I'm still getting a quote of 4. Why am I getting a quote of $4 all the way up? Where is that coming from? Okay? Well, basically, it's approximately going to be pretty close to the bid-ask spread. Okay, so that bid-ask spread is pretty much what they're saying, I want to make at least $4. If they're going to sell it to you for 4, they want to be able to make at least 4, if they're going to do the trade. And so that's that bid-ask spread built in there. So if I'm selling, I should always be looking at the binary price ladder to figure out where I'm going to take profit. And I should not try to take profit at a price that, really wouldn't benefit me at all if I did the trade. Because if I go in and put a $3 one, I'm going to hold the trade till expiration. Guaranteed I'm not going to get filled. Okay, now, not guaranteed. Okay, somebody could take your trade. The market maker could take your trade. Another trader could take your $3 trade. But if you want to get filled, you want the $4 price, okay? And part of the reason I brought that up is while I was watching this gold trade, I saw somebody had an order in for like 25 cents. They put it at buy at 25, and I can see people right now with an error on this trade. Check this out. Let's look at it. They're doing it immediately. At this moment, people are making this mistake. Right here. Okay, I sold the 67.60s, and there's another trader that sold the 67.60s on pound dollar. It's falling on down. They have a take profit at $3, and they have a take profit at $2. It is not going to get filled unless somebody comes in and says, "Hey, I'll sell to you for $3, or I'll sell to you for $2." Well, the exchange fees are $1.80 round turn. Okay, so they're going to make 20 cents. So they're going to make $1.20 on the trade on a $97 risk. No, they're not going to do that. Okay, so if you want the market makers, or another trader to fill your trade easily, do not take profits below that minimum price range. Now, I'm not saying like where it's quoting right now. I'm just saying look up the price ladder, cancel your $3 order that's not going to get filled, and put in a $4 order. Cancel your $2 order that's not going to get filled, and put in a $4 order. Your chances of getting filled are pretty much 0. Okay? And yeah, like I said, it could happen, so maybe it's a little higher than 0, but it's an absolute waste to go in and put it in there. And yeah, some guy now has like 101 in there for $2. He's not going to get filled. And if he does, somebody's really stupid for taking it, simply because there's no real big value in that. Now, the market maker could come in and they could try to make a market for that price. Okay, if they do, then awesome. But that's somebody putting in a buy at 2. In order to be able to sell at that price. And notice, I'm not doing that trade. I'm not buying at $2. What I'm saying is that trade just basically has little to no probability. So when you're setting your take profit goals, you need to be watching the binary price ladder to see if that's realistic. Now, if I was over on the weeklies, okay, check this out. There are some $3 ones on the weeklies. So I'll get rid of the dailies. Let's drop those. Keep going the opposite. Let's just do all and then go weekly. See if that'll narrow it. Okay. $3 on the weeklies is realistic. But $3 on the daily is not. Okay? So, just, it's having that realistic price that you put in. Like, is this order have any chance whatsoever of being filled at all? And without having that in there, you're just, you're asking, if you go in on one of these and you put in an order for $2. Now, it's maybe they're fishing for stupid traders that'll take trades that have no profit potential. Maybe that's what they're doing. But, you're tied up a lot of capital, and you're just wasting a lot of money, and, there's no good reason to do it. And then even to be profitable on the trade, you're only going to make, if you're hitting that buy for $2, it has to fly up to get it. So, yeah, you don't have to have that many trades for it to net out at a profit. But, again, your probability is just extremely, extremely low on accomplishing that and getting that fill. So I hope that makes sense. take profits need to be set based on, your worst case take profit. Your lowest buyback should not be lower than what you see up on the price ladder. Your highest sellback to get out of the trade early should not be higher than what you see on the price ladder. So, if you'll learn that, if you'll use that to your advantage, it'll help you out a whole lot when you're trading on Nadex. Now, let's see here. We got a few other things that we can look at before the hour wraps up. Maybe we got another trade we can do. Analyzing, a couple markets here, seeing if we got anything. Let's see. We get oil is going to be 230, so that's going to be after the show. I guess we could look at maybe a pound trade right now. So let's pull this up and look at it and check it out. See if we like anything. Okay? So close those out. Example done on that one. And let's see here. Pull up some FX charts. Get rid of that. Get rid of that. Get rid of that. And then what I like to do, a lot of times I'll go over and I'll look at my quotes. See what's moving. I mean, maybe pound or maybe something else. We've got some pretty big moves on. Euro dollars, but had some huge moves on it today. Euro yen, also big mover today. Okay, so let's check those out. We'll see if we got anything that we like. I'm going to move on over here. We're going to go to the euro yen. That's my pick. I was going to do pound, but we're going to go to euro yen. And that'll put my expected range. And then I go over here, just do a little chart analysis on euro yen. See what we got. See if I like anything that's out there. Euro yen is exceeding its expected range on the current half hour. So I need to update that to the hour. Because I had half hour on gold because gold expired. The pit closes at 1:30. So I wanted to look at the half hour mark. So I had a true expectation because I wasn't going to get to wait till 2 o'clock for the trade to come up. And while that one is loading up for me, I can go over here. Okay, there we go. All right, so we're getting a move down at the moment. And but the one thing I said I need to do is go in and look at my expected movement on 60 minutes. For the end of this coming hour. Obviously, we're moving down. I like that trend. I mean, everything about that's good for a short. So, on 60 minutes, we still have... Looks like we might still have some room on that. And, all right, we'll be back right after this break. We'll see if we can catch one. It's already been moving pretty good, though. All right, we'll be back right after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. DirectionShares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the DirectionShares carefully before investing. The prospectus and summary prospectus contain this and other information about DirectionShares. To obtain a prospectus or summary prospectus, please contact DirectionShares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhoads, host of the Money Master Show at TFN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhoads Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. And basically, we got a few more ticks left in. There's not really a whole lot over here. And I'm also looking at the euro dollar, but we only have about 6 minutes left till expiration. And so a couple things I do notice on this trade potential is, we are in a downtrend, okay? As far as expected movement, right now we're sitting at an expectation, we're an actual 9 on expectation at 13. So there is the possibility to move down another 4 additional ticks on the trade. So that's one thing to consider when looking at this trade. Let's see here. Another couple things to look at. We could look at euro yen. And the euro yen, I had a problem with that trade, and actually that's what makes it a good trade. I was looking at it, and I was going, I was wanting to go short on this trade, but my one main problem with going short on the trade was that we were at the expected range. Okay, for the hour. So look at this right here. Look at the euro yen, and we were at the expected range for the 2 o'clock expiration. I mean, we're a few ticks away, but that's 14 out of 17 ticks on that. And so I was like, I don't know if I want to go short on this trade with only having a few ticks left in the hour for a possibility. And so what I did is I hopped in, and we got commercial breaks and everything else, but I hopped in, went long on the trade on a slightly out of the money binary contract. And let me show you that right there. if we could wrap that piece up maybe before the show goes out. And just set a take profit at a 1-to-1 on the trade, or on at least half your contracts. So, you go in and set a take profit would be, you could do it when it hits the strike. You could do it at a 1-to-1. So I get a $73, take profit. And so just a small move up, which we got. The thing flew up. And, you took profit, like I said, on a good chunk of them. And just let me show you this. I'm trying to get the chart to render in time. I have a lot of stuff I put on my charts at once. But I guess we go over here. We just zoom in on just a simple 1-minute chart. But looking at like a 141.93 potential, trade. And because we had maxed out down here. So that's when I bought when I was like, oh, we're at the maximum level right here. We're dealing with a couple ticks of the expected movement on this hour. This could be a good reversal trade. And just knowing that Yen is pretty volatile, period. I was like, hey, if we get a few ticks out of this thing could really pop up and make a nice profit. And the 148.93, you could have bought that for $10, $20, $30. Probably about 25 the lowest. About 20 to 25 the lowest price you could have bought it at. And but just a really simple trade. There's a lot of ways to trade the contracts, and I'm just trying to expose you to that. But the big thing I want to expose you to is just make sure you have expected movement, built in. You know where you're going. Not just randomly going, this binary, that binary, this take profit, that take profit. So, and let's see here. I'm trying to look at a couple of these. But basically that's about as close as you're going to get for a trade right now. There's not really even another good one. I'm just looking at all the different contracts. And I don't really see much more beyond that for the current hour. But yeah, so it's moving up, which is good. And so if it keeps moving up, then do that. Now, if you have a take profit in, there's probably not a real good reason for you to leave the take profit in the last 2 minutes. Okay? So you may want to cancel that out and let it expire, hopefully, in the money. We'll see here in the next 2 minutes. I'll follow up with the Tiger Day and let you know how that one goes. All right, stay there. We'll be right back after this with another great show for you, and I will see you Monday. You'll have a great weekend.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.